I finally got around to reading this article. It was published in 2015 by Mark Cuban, president of Unspecified. I think it's funnier and more interesting to read it now, um, with the benefit of hindsight at our backs. Let's see what Mark Cuban had to say about the tech bubble in 2015, which hasn't burst. So, gosh, jolly gee wow. This is going to be quite the explosion. The good old days. Stocks are up 25, 50, 100 more in a single day. Day trading was all the rage. Anyone and everyone you talked to had a story about how they had made a ton of money on such and such a stock in an hour. Stock trading millionaires were being minted by the week, if not sooner. All right. It's painting quite the picture. You couldn't go anywhere without people talking about the stock market. Everyone was in or knew someone who was in. There were hundreds of companies that were coming public and could easily be bought and sold. You just pick a stock and buy it, then you pray it goes up, which most days it did. Then it ended slowly by surely, I suppose, but surely. The air came out of the bubble and the stock markets declined and declined till the air was completely gone. The good news was that some people were able to see it coming and get out. I did. About 6 months before the stock market imploded entirely. Well, I think he's talking about 2001. I'm not 100% sure yet, but I assume so. I'm hoping it's a Shyamalan twist, and that Mark will say something like, well, you may think it was 2000s, but it's 1930s, or something like that. Anyway, I got out. I had no idea. I was just tired of staying up at night, thinking about stocks. Like, there are better things to think about. Anyways, if we thought it was stupid to invest in public internet websites that had no chance of succeeding back then, it's worse today. In a bubble, there's always someone with a great idea pitching an investor the dream of $1 billion payout with a comparison to an existing success story. In the tech bubble, it was broadcast.com, AOL, Netscape, etc. Today, it's Uber, Twitter, Facebook, etc. To the investor, it's the hope of a huge payout, but there is one critical difference. Back then, the companies the general public was investing in were public companies. They may have been horrible companies, but being public meant that investors had liquidity to sell their stocks. Okay? The bubble today comes from private investors who are investing in apps and small tech companies. Just like back then, there were always people telling you their idea for a new website or about the public website they invested in. Today, people always have what essentially boils down to an app that they want you to invest in. But unlike back then, when the dream of riches was from a public company, now it's from a private company. I feel like the point here is being reiterated over and over again. We're with you, bro. And therein lies the rub. Okay, let's get to the rub. People we used to call individual or small investors are now called angels. Angels. Why do they call them angels? Maybe because they grant wishes? How'd you like that inflection? According to some data I found, there are 225,000 angels in the US, like the crazy days of the internet boom. I wonder how many realize what they have gotten into. But they're not alone. For those who can't figure out how to be angels, you can sign up to be part of the new excitement called equity crowdfunding. Yeah, 2015 is about when crowdfunding websites such as Kickstarter, Indiegogo, and similar. Uh, Rocket Hub is another one. Oh man, I hope I got the name right. I'm friends with the founder. Well, one of the founders. Anyways, yeah, 2015. Crowdfunding websites were all the rage for sure. SEC passed some kind of a law that essentially allowed what would be the proper level of analysis. It allowed people to decide for themselves whether or not they were willing to make costly mistakes. Whereas before that, they were barriers to investing and thus making costly mistakes. So SEC removed those barriers around the same time, and it was gradual. In fact, I believe it started around 2011 when these particular laws were being loosened. Equity crowdfunding allows you to join the masses to chase investments with as little as $5,000. Oh, the possibilities. I have absolutely not doubt in my mind that most of these individual angels and crowdfunders are currently underwater in their investments. Absolutely none. I say most. The percentage could be higher. Yeah, but that's if you assume that they're hoping $5,000 buys them 5 million or $5 billion. I don't think angels that I talk to, they're not. They're looking for a story, man. They're looking to be part of a narrative that they can be proud of. They're buying a seat at the table when the story of the startup or the company or the founder is told. They are buying killer story for a dinner party for $5,000. I think that's a much more poignant level of analysis. And well, I mean, who's to say that money invested is supposed to be made back anyways? Investing, particularly angel investing, um, categorically speaking, objectively speaking, is the riskiest category of financial instruments. There is no riskier. I don't know, maybe Bitcoin these days, but there's always the far edge of the risk comfort scale. And your 401k is on the other side of that. And I think most adults understand this. Anyways, let's see what Mark says. Because there's zero liquidity for any of those investments. None, zero zip. Okay. All those angel investments in all those apps and startups, all that crowdfunded equity, all in search of their unicorn because the only real salvation right now is an exit or cash payout from operations. The SEC made sure that there is no market for any of these companies to go public and create liquidity for their angels. Well, isn't that interesting? Well, that's very interesting. Why is that interesting? Because while this may have been true in 2015, and actually maybe not. Bitcoin had evolved to fill in that gap through ICOs, initial coin offerings. So life finds a way, to quote one of the greatest philosophers of our time, Jeff Goldblum. The market for sub $25 million raises is effectively dead. DOA, for the uninitiated, that stands for dead on arrival. I love TLA's three-letter acronyms. Gone. Thanks, SEC. And with the new equity crowdfunding rules yet to be finalized, there is no reason to believe that the SEC will be smart enough to create some form of liquidity for all those widows and orphans who will put their 5,000 into the dream only to realize that they can't get any cash back when they need money to fix their car. That is a very glib outlook. So why is this bubble far worse than the tech bubble of 2000s? Yeah, he is talking about it. Because the only thing worse than a market with collapsing valuations is a market with no valuations and no liquidity. Well, let's revisit that. If stock in a company is worth what somebody will pay for it, what is the stock of a company worth when there is no place to sell it? Okay, so let's go to the top one. Because the only thing worse than a market with collapsing valuation is a market with no valuation. Okay, so he's comparing two markets, presumably post-2001 market and pre-2001 market. And the underlying assumption here, because the only thing worse than a market with collapsing valuations is market with... The assumption here is that the pre-2001 market had collapsing valuations that were liquid. So companies both had valuations and were liquid, had valuations and were liquid. This is true. If you owned stock in IBM in pre-2001, as well as today, you can relatively easily cash those stocks, barring some catastrophic event that would change that. So assumption here now is that post-2001, and in fact present tense bubble, has no valuations and no liquidity. Okay, that's fair. I'm a little bit less fire and brimstone about these things. I think investing 5 or 10,000 into a startup makes sense if that's not going to break the bank. That's not an assumption Mark is making. He's thinking that 5,000 is going to break the bank, which is a funny position for him to articulate because it's certainly not true for him. Okay, so what are we to make of that? Let's see what others have made of it. Let's sort these comments by, in some way, shape, or form. Can we? We can't. All right. So we won't. Let's see. All right. Nice to hear the truth in the tornado of denial/ignorance. Mark, do you know why? Because of our great President Trump, that's why. Yikes. Well, there's times I wish I had made investments long ago. You ever strikes you as some people shouldn't be leaving comments? Wow. YouTube is not the only one with comment problem. Okay, I have an idea for a company. This is from Daniel Solomon. I have an idea for a company that nobody is doing yet, and there are hundreds of millions of customers already there just waiting to buy this product. Oh, this should be good. Let's read this. I hope this is good. I've already researched it, but have. Oh, he's pitching Mark Cuban in a LinkedIn comment. Oh, dear. I have already researched it, but have no idea how to start it, but it is not being done yet. Unfortunately, I have no way to make it happen. I just need information on how to do it. Don't want investors if I can do it alone, but that is the issue, where to go figure out how to make this idea a multi-million-dollar company. I hear you, buddy. I'm all in on the hard word part. If I could get to that point, I suppose that's a typo, hard work part. If I could get to that point, but as I mentioned, there are without question hundreds of millions of customers sitting there. I have not found any company doing this. I fortunately am a graphic designer, already had begun brand. Does that contribute? Let's figure out. Well, this doesn't go anywhere, does it? I thought we're gonna hear an idea. All right, let's play a comment roulette. One more, and then we'll wrap it up. Okay, this fella felt it necessary to include his sleepy time picture. Let's see. Selling birth certificate in stone with the time it was made. You pay for the legal. Oh, that's a mistake. Reading that was a mistake. Okay, here's something that might be interesting. Mark, why does radio have access to people's thought processes? They put my thought processes on display in there. There is misspelled homes and harmed me. I know you got the emails from Seth Fishman. You should go to the FBI and have them look into this. Oh, LinkedIn comment section. How great you are. Well, there was Mark's take on Tech Bubble in 2015. What I find most fascinating is that we are certainly due for a burst.